Welcome to Bears in Exile. Today is June 17th. We're going to take a look at Min's Warehouse. This is a special video that I'm doing for my buddy Legatus, and this is also a little bit of a show off of the black box that I have been working on. And it is not complete and it is not fully optimized. It still has work to be done on it, but regardless, here we go. And as you can see here, there is all kinds of data here, and it looks like a big jumble, and it's confusing, and you know, it can be really confusing. It takes a heck of a lot more time to interpret this thing than anything else pretty much that I've seen. So, but it is completely visual, and I'm going to quickly go through some of the rules regarding the system. And what is the system? Well, the system consists of trends. We have an extreme trend, we have a major trend, we have a minor trend, we have the Bollinger Bands, and we have the middle Bollinger Band, and of course we have Guppy underneath all of that. And the main idea behind the system is that when trends interact with one another, they will have a reaction. And that means when the candles interact with a trend line, it will have a reaction. When a trend line has a contact with another trend line, it will have a reaction, which in turn affects the candles. And beyond that, we have the Bollinger Bands giving us suggestions as to the potential movement of the trends. And what is the purpose of all of this? Well, the purpose is to identify a trend, and the purpose is also to forecast the movement of a trend and the corresponding price of an equity inside of that trend. So, what are we really looking at? Well, to give an example, here's a year, roundabout, almost a year, and we have the minor trend floating about inside the major trend, which is also inside the extreme trend. Now, when all of these are pointing in a singular direction, we know that a trend is underway. As you can see here, extreme pointed up, major pointed up, minor pointed up, and it pulls the price along with it until, and this is probably a bad example, but one that is optimal for us, when all of them converge and have contact, a major bounce off. It's like bumper cars. Comes into contact and flies off of it. You know, and piercing it is even better. So, let me find some other examples. As you can see here, we had pretty much the same thing. We had the minor pointed up. It was taking the price along with it. It had an interaction with the extreme, which was also pierced by the major. So we knew that there was some sort of reaction should happen here, and there was a reaction until it slammed back into, it left the minor trend and pierced the major and the extreme and had a reaction off of that, with the minor also coming into contact with the major and bouncing off of that. So that's in a nutshell what we are looking at. Another indicator of the system is the middle Bollinger Band. When it is outside the minor trend, it lifts it or it sinks it. And when we have a crossover, we know there is a potential for a change in trend. And that's really good because, as you can see, it gives much more forewarning. You can see Guppy here in the background, and you know, this foreshadowed Guppy Let me find another example. Here we have a crossover here, giving a possible foreshadowing before Guppy. And sure enough, about 3 bars ahead of time, we had a reliable signal of change before we had a downtick on Guppy. And so there is great potential for forecasting. Not only can it tell us where it should be going, but it also tells us potentials for where it could go. Because like at this point, we have the major down here. So we know that when this changes up here, we know that it has the potential to go down and test this. In this case, it did not. But in many other cases, it does. So, and one thing that I have to say is this is not finished. It is not optimized. It is pretty good right now, but it has a long ways to go. And it does have a weakness in that since it is based upon moving averages, which are interdependent, they do tend to get skewed, in its immediate future, just because that's how moving averages work. And when you have violent swings, moving averages can do odd things. So, in an extreme move, it is less reliable. Unfortunately, that's what we have right here. But in a more sideways action, it becomes much more clear, or if it's in a clear trend, it is much more clear. So even though we have had this extreme move, we still can glean some really good information out of it. So what is it telling us at this moment? Well, take a real close look. We can see that the extreme trend is still pointing up, suggesting that Men's Warehouse is going to go up. We also have the major trend, and it is mostly pointing up, but it is smoothing out some, also suggesting that it has room to move up. However, disagreeing with this is the minor trend, which is still pointing down. We also have the middle Bollinger Band outside the minor trend, suggesting that it is going to be pulled down further. Well, how useful is that? Actually, it's very useful, because we also have the Bollinger Bands, and they are looking that they're coming in to pinch one another. They're closing, suggesting a bigger move is about to happen. And we also have Guppy to rely upon. There's a bullish bar in existence. It does have decent separation. It should have some strength. And the short-term moving averages, although separated in a bearish way, are sitting on the bar, not penetrating it at the moment. There is a slight from yesterday, but overall it is just sitting on the bar. And we're coming off of a big move down in the overall markets, which also affects these. So the stochastic is still pointing down. The RSI is trying to figure out what to go do with itself, and the MACD is thinking about turning up. So what does all this tell us? Well, it tells us that the minor trend here states that we could have a drop down to the 30 at the most, just slightly below. Should it do that, it should have a reaction off of the minor trend, should have a reaction from being so far outside the major trend, and it will also come into contact with the extreme trend. So, should it come down, we would think that there would be a major reaction and have it bounce, unless the market just is destroyed by Europe and that's the end of everybody. But this would suggest there is lots of bullish possibility in this equity. And if that doesn't happen, and it doesn't drop down here, the minor trend is going to change. And with that, the middle Bollinger Band will come down into the middle of it for a possible crossover, and if it gets all the way underneath it, this is going to point up, and it's going to go on its merry way. So, what can we do about forecasting? Well, if it does that, and this does start to point up, and that we do get a crossover on the Bollinger Band, what can we expect? Well, we have the Bollinger Band line up here at the top, over here at 33. We also have the major up here at 36, and the extreme up here at 37. So, we know that the range currently is between 30 and 37, depending on what the market decides to do. And based upon the black box, which is mixed, but it does give us clear signals, I would say that it is a very likely possibility that this is going to go up. However, we may get a dip first down to 30. So, there you have it. There is Men's Warehouse as best as I can read it. Hope you enjoyed this video. We will be using the new system more in the future, and stay tuned. As always, this chart is for entertainment, educational, and consumption of time purposes only. And as always, all investing decisions are your own. Thank you very much.